Here's the economic update for November 2nd, 2025. So the Fed on October 29th, they had their Federal Open Market Committee meeting, and this is basically, they announced a 0.25% interest rate cut. That's what we predicted about a month ago. And our Fed funds rate is now between 3.75% and 4%. They said that the economy is expanding at a moderate pace. If you look at GDP now, we're at 3.9%. Approximately 1 to 1.3% is actually coming from AI investments. They did announce that the job gains have slowed and unemployment has edged up. Now, we haven't gotten any additional, basically, government data. We've been going from ADP and other sources because of the government shutdown. Inflation has moved up since the beginning of the year and still remains elevated. So this is a bit of a problem. If you have unemployment going up and jobs have slowed, generally you drop interest rates to spur the economy. If inflation is moving up and it's remaining elevated, what you normally do is you increase interest rates. So we're having both occur at the same time, and they have to figure out which one's a bigger risk. Right now, they're seeing that the job market is becoming more of a risk than inflation. So they're going to try to cut interest rates to a degree to make sure that we don't have massive job losses. The reason for this is because the Fed has a dual mandate. One is to keep maximum employment, and the second one is to keep stable prices. With inflation at about 3%, it's above their 2% target. So they're allowing this to float a little bit, and they're more concerned about the jobs. Leave it in the comments below. Have you seen that it's more difficult to find a job right now? I actually have a couple of people I know that have gotten laid off or going through layoffs, and they're finding it a bit more aggravating than normal to actually go and find a job. It's not as easy as it was a couple of years ago. If we look at our jobs numbers on October 28th, ADP, again, this is non-official data, they estimate an average of about 14,250 jobs per week being created, and that's averaging over a 4-week period ending October 11th. Previously on October 1st, ADP announced that there was about 32,000 jobs lost in September, and our last official government data was on September 5th. Our unemployment rate was 4.3% and slightly increasing, and about 25.7% of those people that are on unemployment, they were unemployed for at least 27 weeks, meaning they're no longer receiving unemployment benefits. But this is telling me that a quarter of people that get on unemployment are unemployed for 6 months or more. And that's going to come back into, if you want to get prepared for this, start building an emergency fund, because it's not as easy for people to find jobs right now. And you can also look at the last JOLTS report, put that up on the screen. You can see the number of jobs has been declining over the last couple of years. Note, the stock market is not the economy. Stock market could go up for a period of time while the economy is starting to struggle. And by the economy, I mean more of the people. So an example of this would be, say a company lays off a bunch of people and then the stock goes up, but the people have to cut back and they don't have enough money to spend. Now, in isolation, this occurs. When it becomes very broad, usually the stock market also goes down. But as an example, I'll just take Amazon. So October 28th, Amazon announced they're laying off 14,000 people, and internal documents say it could be as much as 30,000 people. On October 30th, Amazon announced its third quarter earnings. They're up 12% year over year. AWS cloud computing growth is plus 20%. It's the fastest growing in the last 11 quarters. And on October 31st, if you look at the stock price, the stock continues to climb. For October alone, it's up 10.69%. So in this example, Amazon is laying off 14,000 plus people. Their earnings are up 12% year over year. Their cloud computing is basically up 20%. And their stock continues to climb, and it's up 10.69% within a month. So this is what I mean by the stock market is not the economy. They're not exactly the same. And in fact, by laying off people that cost money, they're effectively reducing their costs. So then their revenue minus their costs, that's what your profit is. You can actually increase profit while laying people off, which then stocks could go up because the company is paying less in labor costs. A lot of people don't know there's something called the WARN Act in the United States, and each state has its own WARN Act site. So you could say WARN Act and then put the state, and you can see your individual state and all the employers that are laying people off. They're required by law to provide 60-day notice before the layoffs. So if you check your state, every month, you might actually know before a layoff is announced. With UPS, they're laying off 48,000 people, Amazon 14,000, Paramount 2,000, Zika is 1,500, don't know that company. Target is announcing 1,000 people are being laid off. General Motors, another 200 people will be laid off. And Target is eliminating 800 open positions. So in total, it's like 1,800 positions will be eliminated, but of which 1,000 people will be laid off. As of October 1st, the US government has been in a shutdown. Now it's 33 days and counting. It's going to be a minimum of 34 days because of Monday. And then this is now the second longest shutdown in history. Like I said about a month ago, I thought this would probably rival the 35, 36-day shutdown we had previously. So this is not really a surprise. But with this, note that no more economic data like on jobs, spending, jolts, that sort of thing is coming out until that's over. Big one is there's no pay for air traffic controllers, TSA. Basically, a lot of people are calling out sick, and who can blame them? They haven't been paid in a month. So this is equaling longer lines and delays at airports. Airlines are saying that they're getting close to a breaking point, especially if it gets close to Thanksgiving. So we'll see what happens, but the last time we had so many air traffic controllers start calling out sick and not being paid for more than a month, that's pretty much what led to the last shutdown being stopped. So SNAP, or Supplemental Nutritional Assistance Programs, people call it food stamps, serves about 42 million Americans. And WIC, Women, Infants, and Children for under 5, it's about 7 million Americans. That's running out of funds on November 1st. Now, if nothing happens, basically there's no food stamps. So what happened is a federal judge stepped in and said the U.S. Department of Agriculture can't hold on to its money, which is used as contingencies for other disasters. And it says it has to use some of that money to fund the food stamps and WIC programs. So we'll see how that works. What's going to stop the U.S. government shutdown? Well, effectively, they need 60 votes to pass in order to stop. The Republicans have voted yes to fund the government, but they only have about 51 or so percent of the voting people. And then Democrats all voted together for no. The reason why is they're holding out for healthcare subsidies. You'll notice some of the healthcare premiums for Obamacare type things are going to go up. So they want additional subsidies to keep that lower. Now, Republicans are voting yes to fund, and they're saying that they don't want to include the healthcare subsidies in the vote. They would prefer to handle it as a separate situation. So it's back and forth, and both sides, neither are budging on their stance. So that's what's leading to this drawn-out shutdown. We have one inflation report, and that's on October 24th, which is a couple weeks late, and that's our CPI. The reason why this was released is because you need 3 months of CPI to estimate what the cost of living adjustment will be for Social Security, and that occurs in the third quarter. So we needed the data. So CPI rose 3.0%, which is not in a good direction. CPI core is just basically minus food and energy, and that's also 3.0%. That came down just slightly. So Social Security averaged over the last 3 months of what the increases have been for CPI. It's 2.8%. So anybody on Social Security, December 31st, some of the payments will start going out because there's a holiday on January 1st. They'll see an increase of about 2.8% in their checks. How's the consumer doing? On October 24th, index of consumer sentiment is down 2.7% month over month. It's down 24% year over year, not in a good direction. Current economic conditions, minus 3% month over month, minus 9.7% year over year. Again, not in a good direction. Index of consumer expectations, minus 2.7% month over month, minus 32.1% year over year. Some initial credit card data is showing that people have spent 1% more this month than they have on the last month, but I don't have any consumer spending because the government shut down. What we're seeing is it looks like a K-type recovery, and what they mean by that is people that own stocks, people that own assets are doing very well. So the top 10% looks like they're driving about 50% of the spending in our economy. So right now we have a K-shaped recovery, and what that means is the top 10% are doing very well. They're owning assets which are going up in value, stock market's taking off, that sort of thing. And they're driving about 50% of the spending. And in the middle and lower income brackets, effectively, they're having to cut back. Inflation's eating away at their ability to buy things. And what I'm seeing is there's more defaults across all credit tiers. People are using their credit cards more. So even when I hear that there's 1% more credit spending this month versus last month, I don't know what that spending is on. Just imagine somebody's buying groceries, but instead of buying it with cash, they're starting to switch over to credit. So in that case, it wouldn't be a good situation. Real estate for existing homes. October 23rd, existing home supply is at 4.6 months. A balanced supply would be about 6 months so that it's not a buyer's market, it's not a seller's market. So this is still a seller's market, but not by much. And it's gone up by 0.4 months over the last year. Our median sales price is now at $415,200, which has gone up by 2.1% year over year. These are the areas that prices have gone up more or less. So by region, it's going to vary. But overall, it's either stable or still increasing in price. On October 30th, the 30-year mortgage is at 6.17%, and that's been going down. It was over 7% at one point, and it's declining. So anybody that's getting excited that interest rates are going down, please be aware that approximately a 1% drop in the interest rate allows for about a 10% increase in what people can pay. That sounds great, but realize that that's not just for you, that's for everybody. And you're in competition with everybody for a limited resource. So if you can spend 10% more and the other person bidding against you can spend 10% more, you would expect the home prices to go up approximately 10% for every 1% decline. Now, that's of course, as long as we don't hit a recession or something along those lines that would be deflationary. But it seems like many people at this point are not looking at a recession, but it's a slowdown in the economy. Now, that seems counterintuitive because we're at 3.9% GDP, but not everybody is doing that well. On October 16th, we had our CEO survey. More CEOs expect the economic conditions to worsen in the next 6 months, so that's up. That's 38% think it's going to get worse, 24% expect it to get better. More, 32% believe that they will increase their workforce over the next 12 months. 29% plan to decrease their workforce over the next 12 months. The majority, 64%, expect an economic slowdown with an increase in inflation. This is what people refer to as stagflation, and they think that's going to happen in the next 12 to 18 months. We've also seen CEO confidence slightly negative. 81% expect more than half of the jobs will be changed by AI within the next 5 years. So that's great. So with all that information, what am I doing? Well, I'm still having a 6-month plus emergency fund. If you don't have any money saved up, start somewhere. Even if it's $100, $1,000, a couple $1,000, anything's better than nothing. Even if your car breaks down, you want to be able to handle that without panicking. So put together an emergency fund. And I have some videos on how to make a couple extra $1,000 a month in practical terms, part-time, that sort of thing. So you can check those out. So anything I need in the next 5 years, I'm not putting that into the stock market because that can go up and it could also equally go down in a short period of time. So I put that into CDs, high yield savings. All of these I make sure are FDIC and they're up to $250,000 of protection. For any money that I don't use or don't need in at least 5 years or longer, I'm using dollar cost averaging and I'm buying about 80% the S&P 500, about 10% the total international fund, and about 10% bonds. I also do hold over $100,000 of physical gold, silver, copper, aluminum, and precious metals along those lines. I'm not currently buying them. I bought gold back when it was about $1,400 an ounce, and silver when it was $15 to $17 an ounce. I'm not currently buying it at $4,000 an ounce and about $48 an ounce. And then when I talk about bonds, why bonds now? Because I haven't held bonds while interest rates were going up, but I like to hold bonds while interest rates are going down. Bond value goes up when interest rates go down. That's basically all you need to know. And what's happening right now, interest rates are going down. So for me, generally, I'll start buying bonds and holding bonds as interest rates go down. So that's why. If you enjoy learning how to make more money, how to save, how to invest, how to start businesses, this is a channel for you. Please subscribe, give me a like if you enjoyed what you saw. Also know that I have a free Discord channel. I go on there maybe like once or twice a week and talk to people and respond to things. Just realize that I'm not going to direct message you if I didn't verbally speak to you. So there's a lot of scammers that they'll put like a dot or something after the name, and you'll notice that it's not shared with anybody. And if you would like to support the channel, you can join through memberships. And thank you for all those that have joined and supported the channel. Thank you for watching and have a great day.